Welcome to the Eggs Invest podcast series, where we explore smart, practical strategies for successful residential property investment across the UK. I'm Anna, your host here at Eggs Invest, and today we're going to talk about something every investor faces at some point: how to avoid common mistakes and learn from real experiences in the UK property market. Investing in residential real estate can be incredibly rewarding, but it's no secret that there are risks involved. Knowing what pitfalls to watch out for and understanding lessons from others' missteps can save you time, money, and stress. Let's start by looking at some of the most frequent mistakes investors make here in the UK. One classic error is rushing into a purchase without enough research, whether that's skipping thorough market analysis, neglecting due diligence on the property, or underestimating repair costs. I've seen people fall in love with a property and then realize too late that it's in an area with declining demand or that it needs far more work than expected. Another common pitfall is misunderstanding financing. For example, taking on a mortgage that's too large or failing to account for interest rate changes and how they might impact your cash flow down the line. And then there's the temptation to overestimate rental income, expecting full occupancy or higher rents than the market will realistically support. Mistakes like these can quickly turn what should be a profitable investment into a financial headache. Now, it's not just about what to avoid, it's about learning from stories of those who have been there. I want to share a couple of real-life examples from the UK market where investors ran into trouble and what they did to bounce back. For instance, one investor bought a Victorian terrace home thinking it was a bargain, but the property had significant damp issues hidden beneath the surface. They hadn't done a proper survey beforehand and ended up with a hefty unexpected bill. The lesson: always get a thorough survey from a qualified professional before signing on the dotted line. Another example is an investor who leased a property to tenants without doing proper background checks. The tenants ended up causing damage and missing rent payments, which took months to resolve legally. That investor quickly learned the importance of rigorous tenant vetting and having a solid lease agreement in place. These aren't horror stories meant to scare you. They are practical reminders of why attention to detail and careful planning matter so much. So, how can you protect yourself and your investment? Start with solid research. Know the local market trends, neighborhood prospects, and typical rental yields. Make a checklist of due diligence items, legal checks, survey inspections, and financing options. Work with trusted professionals like solicitors, surveyors, and mortgage advisors who know the UK market well and can help you spot red flags early. Always plan your finances conservatively. Factor in potential vacancies, maintenance costs, and possible interest rate rises. It's better to be pleasantly surprised by profit than caught off guard by expenses. Also, keep educating yourself. Follow market news, attend property seminars, and learn from experienced investors. Mistakes happen, that's part of the journey. But what matters most is how you respond. Viewing challenges as learning opportunities rather than setbacks will make you a stronger, smarter investor. Remember, the UK property market is dynamic, but with the right preparation and mindset, you can navigate its ups and downs successfully. Thanks so much for tuning into this episode of Eggs Invest. I hope today's insights help you avoid common pitfalls and feel more confident as you build your property portfolio here in the UK. If you found this useful, please subscribe and share with fellow investors. And if you have any questions or stories to share about your own investment journey, I'd love to hear from you. Just reach out on our socials or website. I'm Anna, wishing you smart decisions and steady growth. Until next time, happy investing.